Welcome to the Real P&L show, where I share my real P&L on 4 accounts and share my proprietary safe wheel for free. So let's go ahead and get started here. Do want to make sure my audio is working, everything's working. So let me know there in the chat. I'd appreciate that. Okay, let's start with the earnings edge. I'm going to refresh this page right here. So the earnings edge, what is going on with that? I haven't made a trade in that for a while until today. Last week I put on a trade. I closed it out today for $1,596 profit. You can see that right here. So what is my net lick? 1416. So let's put that in the spreadsheet. This is doing pretty well, obviously. 1416. $12,000. Traded Home Depot, made $1,596 so far with this version in 2025, version 3.0 update. Nine wins, 1 loss, 90% win rate. I don't expect the win rate to stay that high, and average win 954, average loss 516. And you can see how the earnings edge is done over the last, since I started trading it in 2022. Of course, I have the new 3.0 version, which is really the more relevant version. And you can see that it's up 131% this year. Obviously performing quite well. What's SPY trading? Let me put that in here. It's up a lot. Okay, 580.10. It's went on a tear. So actually, from what I'm getting, my numbers, the S&P is still down in 2025, but not by a lot, about 1%. All right. So I want to make sure you guys are hearing me, seeing me okay. Make sure you put that in the comment that you can hear me and see me. Let's see here. And be sure to post any questions you might have. Post those earlier rather than later. I like to get to those questions. Sometimes I'm ending the broadcast and the questions come in a little late. So I want to make sure that that's all working okay. All right. Okay, good. So that's the earnings edge, obviously doing quite well, vastly outperforming the S&P. We're going to have a little more volatility, right? There's some more volatility to the downside, but up over 130% in 2025. And that's the new 3.0 version. So it's doing quite well. All right, let's talk about the next PL5 Pro. PL5 Pro is not doing so well this year. This one's underperforming quite a bit. So let's go to that account. I believe this is it. Yeah, 406,875. Yeah, definitely underperforming here. 406,875. This one was doing quite well until today. But that's fine. That's the way it goes. So yeah, it's down 13% year to date. So vastly underperforming. Kind of a rare situation that we hit. And if you watch my last video, I explained the changes that I made because I don't like seeing this much of a drawdown here. Even though I'm an options traders, and a lot of options traders are down, they go down 30, 40, 50%. I don't like 13%. That's too much for me. So I made a tweak to the trade plan. So the PL5 Pro has been changed a little bit, especially when it comes to crash markets. So yeah, down here, but you can see that I'm still up since I started trading it on July 19, 2024. I'm up about 1%. Now the market's up about 5.5% since then. So I'm underperforming there. But of course, my drawdowns are much lower than the market. So on a risk adjusted basis, it's probably pretty equal on a risk adjusted basis with the PL5 Pro. But I expect the PL5 Pro to do well towards the end of the year. And I'll take a little more time here to recover. And when it does, it'll be fine. But underperforming here. Now the PL5, which is, if you're in the PL5 Pro, you can run this PL5 variant, right? There's nothing wrong with this variant, and you can run it. If you're in the Pro, you can run the PL5. And I'm going to pull that over here. Can't show the whole screen because it has my account number in there. You see the accounts for $31,003. So let's see how that looks. 31003. So you can see that the PL5 is not doing too bad, down 6%, where the market's down 1%. And overall, the PL5 is outperforming the market by 3.34 versus 2.99. So they're pretty much even with the market since July 16th, 2024. But the PL5, this is kind of a variant off the PL5 Pro. You can run this PL5 here, and you would be outperforming still. But I expect both systems to outperform by the end of the year. In fact, the PL5 is outperforming right now as we speak overall since I started it on July 16th, 2024, up 3.34%, where the market's up 2.99% since July 16th, 2024. Okay, so those are the PL5, the PL5 Pro. Let's go to the safe wheel. What's going on with the safe wheel? What is the net lick of the safe wheel? Let's go into this account here. Net lick 5754. 5754. Okay, so it's down a little bit. So the safe wheel in 2025 is up 5%, outperforming the market. Market's down 1%. So the safe wheel is doing much better than the market. You can see since 2022, the safe wheel is up 15% and the market's up 22%. So the market's only up 22% from January 2022. So 22, 23, 24. So it's 3 years and a quarter, and it's only up 22%, the market. But the safe wheel is outperforming this year nicely. Let's get into the actual trading of the safe wheel, because I've made on pretty much every trade right here in front of you, except for the little $5 calls that I buy on Fridays. Let's take a look at the positions. So with the safe wheel, I'm trading LI as the stock. I used to have 100 shares, and I had those shares at $26, and I sold premium at 26, and it got called away. So I broke even on my shares, but I made money. I was always selling premium along the way. I sold premium even when LI went down significantly. I was still selling premium the whole time. So that's what the safe wheel does. It's always selling premium. So that's the advantage of the safe wheel. Plus, when it goes down, you're not getting hurt. You're doing fine. You're not losing a bunch of money, or your unrealized losses aren't huge. Sometimes you're actually making money when the market goes down, and you're always selling premium. You don't get stuck, right? Like you do with the traditional wheel. So if you run the traditional wheel, let's say you run 5 stocks. So you're going to run 5 stocks. Eventually what will happen is you'll get stuck in 5 stocks, right? You'll be holding the bag on 5 stocks because eventually you're going to catch stocks and they're going to drop. And then you're going to catch another one and it's going to drop. And you're going to do fine there for a while. You'll probably do fine for like a year, maybe a year and a half. But then after that, with the traditional wheel, eventually if you're running 5 stocks, you're going to get caught when all 5 of those stocks are going to be down. And you're just going to be stuck. You can't sell any premium. You've got unrealized losses. You're sitting there with your hands on. You're sitting on your hands, not doing anything. The market's going up. You're not making any money, and you're just down, and you can't do anything. Well, with the safe wheel, we don't have that problem. We're always collecting premium. Every week, I am collecting premium. All right, so let's talk about what to do here. So the first thing I want to do when I look at the safe wheel is look at my hedges. So I have the put hedge at the $22 put. So I have 3 questions about this. The first question about this hedge is, number 1, do I own 200 shares? The answer is no, so I do nothing. If I did own 200 shares, I would see if this put hedge paid off. In other words, if it had made enough money to offset my owning 200 shares, but I don't need to do that. Second question is, how many days in trade is it? Is it under 100? No, it's 130 days. So no, so I do nothing. And then the next question is, where is that strike price? Is it within 70% of the price of the underlying LI? Let me mark this LI here and go back. So let's do 22. Let's see if I can find, I have a new computer, so I need to see if I can get my calculator up real quick. And I can. Okay. So I want to do 22 divided by, what is LI trading? 2780, 27.8. And that's within 79%. If it was under 70, right, that means that my hedge is not close enough to protect me, and I would move it, but it's within 79%, so I'm good. So there's nothing to do with the put hedge. I have my long call that I bought. I spent $6 on it last Friday. Every Friday I spend $5 or $6 or $4 on a long call. That's a hedge for my hedge. So I'm double hedged, right? All right, so then now I know all my hedges are in place and I don't own any shares. I'm not looking to write a covered call. I'm looking to sell a put. So where am I going to sell a put? So I'm going to sell a put here in the 4 days, something that expires at the end of the week. I'm going to look at the puts and I want to be out of the money, but I also want to collect at least, let's say 27, 28 cents. But I want to be out of the money when I do it. So 27.50 put is out of the money. The $27 is out of the money. Here I can collect more than that 27 cents that I need. And typically if I can stay out of the money, I'll go one more. So I'm going to go to the 27.50 and I'm going to sell this. I'm going to sell the put here. I'm going to do one, right? Because I have between $5,000 and $10,000. So I'll do one wheel strategy. I'll have 3 put hedges. If I had between 10 and 15,000, I would double everything up. I would have 6 put hedges instead of 3, and I would run two contracts on the wheel strategy instead of one, right? So this system's sized properly. It's all sized properly. In fact, if you want the fast track to this course, you can get that. There'll be a link in the description because I have the course, but you can watch for free here. But I'm going to sell this here. The mid price says it's about 61. So I'm not going to be greedy or anything. I'll just shoot for 61. Maybe collect 60 bucks here. Okay, that didn't fill. Now the mid is 55. So I think that mid price was off. There's probably not a lot of liquidity. Okay, so I filled there at 55. So I collected 55 more dollars. I could get assigned at 27.50, which would be fine because I have a hedge in place. So that is my trade for the safe wheel. Now I want to see if there's any questions or comments. Avery says, yes, everything's working. Leslie Moore says, everything sounds great. Yeah, I have a new kind of setup here where I kind of moved my mic a little bit out of the way. I want to make sure they did that. Avery says, hit that like button. Here's the thing. I share my net liquidation every week. So I share my portfolio every week. And the other thing I have is I've got 4 portfolios that I share. So I've got 4 different systems. So I don't have a hodgepodge of all of my trades. And, my system is like a hodgepodge of all these trades and everything. You don't really know what's coming next or what system you're running or what's going on. I have each individual system in an account, so you can identify that, and we can see how each individual system is doing in those accounts. So there's no question about the results, and I share my P&L every week, so you know exactly what what my system is doing. So I'm willing to share that, and I would really, really want other instructors to share that also, because one of the things the other instructors do is they say, make a living trading poor man's covered calls. Well, that's not true. Make a living, that's false. Like, it's, to me, that's not a true statement. Like, who do you know that makes a living selling poor man's covered calls? Nobody. So why are you making these kind of claims? It's clickbait, basically, is what it is. Now, if you want to run a poor man's covered call strategy because you think you can make a living at it and you want to run it in a portfolio and you want to show that portfolio, that's what I want people to do. That's what I want to see. So if you hit the like button, it will help promote this video and therefore it will help promote the channel, and it will put more pressure on these other guys, these instructors, to actually share their portfolio P&L, because I want to make this the norm here in this industry. So I'm trying to make this the norm, and the way to do that is to help me grow, and the way to help me grow is just simply go down there and click a button and just hit that like button. I'd appreciate that. Kevin, good morning. Good morning, Kevin. Will says, great video on Thursday. Yes, I appreciate that. I did a lot of research into that video. A lot of thought process went into that video. There's a lot of experience, years and 30 years of experience that it took to create a video, to have the thought process, to have the type of research that went into that video. It's like 30 years of what it took of trading in order to create that kind of situation to get to that, what's in that video. Less is more says the VIX is coming down hard. Premiums are not great this week. What's the VIX trading right now? It's under 20. Yeah, but the market's coming up, up 2.3%. A 2% move. That's pretty hefty move. Will says, I saw the backtest the new rules with the crashes and compared it to the old rules. Did you also backtest the difference PL5s during normal times or the past 10 years? Well, the PL5s are very similar. The PL5 and the PL5 Pro are very, very similar. They're almost identical, but there's a couple little tweaks. And as far as the options trading portion of it, those tweaks aren't really that different. It's about how I hold. I do certain things with the S&P 500. Some of it's holding some of the market, and some of it's not holding some of the market. So as far as the options portions of those two, they're very, very similar, almost identical. But there's a couple changes, one or two changes that are a little bit different. PL5 Pro is a little more robust, but not, they're pretty equal. Will says, make sure to like the Thursday video as well. Yes, I'd appreciate that. Thanks, Will. Less More says, any thoughts about running the wheel on silver SLV? The thing I don't like about SLV is it doesn't have earnings, because sometimes when you're in the wheel strategy, and maybe you're kind of in between there where you're down, but you're not down enough to where your put hedge is really paying off. So you're kind of in that no man's land. It's not like you're losing money. You're still collecting premium every week, but you're kind of in a unrealized drawdown a little bit, not a major one, but a little one. You like to have that earning events come up, because for a couple of reasons. One, you can collect a lot more premium because the earnings are coming. And then secondarily, you can get that move that you want to get you out of that no man's land. You can get it either going lower where you make money, or higher where you make money. So that's why I don't like trading SLV. It doesn't have earnings with the safe wheel. Okay. So what I like to say always in parting, as I'm going to kind of end the session here, is if the P&L is not real, what else are they trying to conceal? Don't forget about next Thursday, May 22nd at 9 a.m. Pacific. I'm going to talk about the 8 obstacles that you must overcome to find your trading edge. And most of you guys are probably only overcoming about 3 of those obstacles right now. Okay, so I hope to see you guys there. Hit the link in the description to go ahead and come into that webinar that I'll be sharing the 8 obstacles to overcome. And I will see you guys next week, and we'll see you then. I appreciate you guys.